Friday, October 7th, 2016. Monaco 64, home of alternative economics and contrarian views. It's 1:37 p.m. London time or 8:37 New York time. We've just had the non-farm payroll number come out. Non-farm payrolls increased 156,000 for September. That number was expected to increase by 175,000, so weaker than expected. Unemployment rate, which I know is not really indicative of the strength of the economy, that came out at 5%, was expected 4.9, so higher than expected. Hourly earnings and average weekly hours came out as expected. So yeah, it's a weaker number. Just looking here at how, the mainstream media sees it, Bloomberg, they reported, their headline is, Bloomberg.com, payrolls in the U.S. rise 156,000 as more Americans go back to work. And the sub-headline is, Friday payroll report could reshape Fed rate path. But Zero Hedge, not mainstream, they say payroll rises 156,000, missing expectations. Unemployment rate rises to 5%. So I personally think this is going to lower the odds of the Fed hiking rates in the beginning of November or in December. I don't think there's a chance that they will raise interest rates. It's all been talk from the Federal Reserve and central bankers. So prior to non-farm, the Dow was trading about half an hour before. Dow was 18,250. We're now 18,260. So we're down 8 right now. We were down 20. It did rally higher above 18,300. S&P was 2158, and that's where we're right now. So we're down 3.5. So the stock market is like not really doing that great. Gold was 1255.50. We're now 1259.50. So that's up 4. We did spike to 1266, right on the number. Silver is 1748. We were 1742. So gold and silver are doing fairly well. I guess, again, the Fed's not going to raise rates. They keep coming out and saying they might. It's just trying to jawbone the market. Let's go and see the bond markets, which I think is very interesting and we need to keep an eye on. Normally, this is a weak number, right? So bonds should actually do well. The bond prices should rise and yields should drop. So prior to the number, half an hour before, the 10-year yield was at 174. Right now we're at 176, which is not a good sign. So that's up. The 30-year yield was 246. It's now 249. So that means actually bond prices are dropping and not rising despite weak data. The 2-year note, which is more, two-year note yield is more of a benchmark for short-term rates, which the Fed has more control over. That's actually unchanged at 0.85%. So that's the non-farm update. It's still a long day ahead in the markets in the U.S. We've got, about, 50 minutes until the stock market opens on Wall Street. So if you enjoy my videos, please like, share, and subscribe. If you'd like to donate to my channel, there are links below in the description. I'll talk to you later. Bye.